Good afternoon and welcome. Thank you for joining Lessons in Designing Scalable Fintech Products to Improve Consumer Financial Health, a look at the Financial Solutions Lab. To kick things off, here's Ryan Falvey, Director of CFSI's Innovation Labs.
Hi, my name is Ryan Falvey. I'm the Director of Innovation Labs at CFSI. And I will oversee the Financial Solutions Lab, which is what we're here to talk about today. I'm lucky enough to be joined by two of our partners on this. Matthew Darling, he's a Vice President at Ideas 42 and Teaching Fellow in Economic Design at Harvard University. He has contributed to Ideas 42 projects in poverty, healthcare, early childhood education, financial literacy, mortgage default reduction, climate change, and labor economics. The other partner we have is Matt Taylor from IDEO.org. Matt is a Director of Strategy and Operations at IDEO.org. He has worked with a range of nonprofit organizations, foundations, and social enterprises tackling issues like early childhood development, youth employment, financial inclusion, and recidivism. Together, the three of us are going to be talking about the Financial Solutions Lab, and specifically about how we hope to work with organizations, whether they be for-profit or not-for-profit, to help develop better financial services, products and services for consumers in the United States. So we can go forward to the next slide here. So I'm going to do a quick overview of the Financial Solutions Lab and then hand over to Matthew Darling to talk about behavioral science and how we hope to work with lab members and drawing on some of the learnings we have from the behavioral economics field to help consumers make better decisions. And then we'll turn it over to Matt Taylor at IDEO.org to talk about human-centered design and how IDEO.org's approach can be used to try to create solutions that are more responsive to the consumer needs and challenges that they face. And finally, we'll turn it back over to a quick panel discussion and invite questions from the audience. So to start, CFSI is the nation's authority on consumer financial health. And we are a network of, we consider ourselves to be the hub of a network of banks, technology companies, regulators, policymakers, and advocacy organizations who all share a focus on improving consumer financial health. And if consumer financial health is a new term to you, this is a lot of the issues that have historically been spoken about as the and underbanked, the challenges that low and moderate income consumers face in accessing financial services in this country. We're trying to talk more broadly about financial health, though, because it's more of that kind of helps to describe the outcome that we're looking for in the market, rather than the specific segment of consumers that have a problem, or somehow indicating that the solution is simply more bank accounts. That is not a solution. We actually recognize that this is that the challenges facing a lot of consumers in the U.S. are much deeper and much more complex, and the Financial Solutions Lab is one of the ways that we hope to help solve those challenges. We also do a lot of other work at CFSI. Principally, we serve as a forum for organizations in our country's economy, whether they're the largest banks, whether they're advocacy organizations, whether they're regulators, who are looking at solutions on how to create better products and services. We do that through providing consulting services to some of these organizations. We also do a lot of research, much of which you'll see in this presentation. And finally, through our work and helping to seed and scale innovation in the market. So specifically, the one we're talking about today is our Financial Solutions Lab. This is a partnership with JPMorgan Chase. It's a $30 million 5-year effort to support entrepreneurs and innovators, whether they're for-profit or not-for-profit, to develop and test technology-enabled, high-quality solutions that improve consumer financial health. We're creating a virtual community of startup financial services companies, nonprofit organizations, and social entrepreneurs who are working together to solve some of the most complex challenges that face the American economy. Where the way we do this is we host innovation in challenges. Over the course of the next 5 years, we'll host at least 5 of these, probably more, where we'll identify specific challenges facing consumers and ask for solutions, whether that's from startups, nonprofits, individuals, to help us to really try to drive the economy forward. And we're lucky enough to be partnered on this with two leading institutions in this space: Ideas 42, a behavioral economics firm you'll hear more about in a second, and IDEO.org, HumanCentered Design, who takes a human-centered design approach to solving social challenges. So what are we working on here with the Financial Solutions Lab? Our first challenge is going to be trying to solve the challenge of household cash flow. What is this? This is a problem that almost everybody has faced at some point in their life. Basically, you get paid on, today is Thursday, or you paid it tomorrow on Friday, and your bills are due today, Thursday. If you don't have the ability to access credit, if you don't have savings, this creates a lot of friction for people in their lives. Over 100 million Americans are actually impacted by this. And while it sounds like a simple and a common problem, it can lead to real long-term challenges for financial health, which we'll get into. And we got to identifying this problem through a lot of work that we've done on our research side, and other partners in the market have done over the last several years, looking at some of the root causes of poor consumer financial health. In particular, our work on the U.S. Financial Diaries, a joint initiative between NYU Wagner's Financial Access Initiative and CFSI, quantitatively and qualitatively tracked the finances of over 200 American households. This research showed us in detail that there is a common mismatch problem. The ups and downs or spikes and dips in the household income do not always match the spikes and dips in expenses. And even though over a long term, such as a year or a month, overall income usually exceeds expenses, often by significant amounts, these short-term mismatches create significant long-term problems. So we'll go to the next slide. We'll quickly highlight a couple of these. One is that if you don't have savings, and so about 45% of Americans didn't save any portion of their income in 2012, or you don't lack a rainy day fund, consumers are often exposed to real significant costs. So let's say you miss a bill and you get a late fee. Maybe you have an incident on your credit. You might get a fee from your bank, or you need to go access short-term high-cost credit. None of those are really great options. So on a credit, if you miss a bill and you have something impact your credit, that could add up to major expenses over the course of a lifetime. Over $250,000 is estimated, the difference between someone with good credit and bad credit over their lifetime. And it's a huge market. Americans spent $36.5 billion on credit and transaction products to help manage their cash flows in 2013. So we think because of that, there is a large market both in the number of consumers who are affected by it and the amount of money that they spend on this challenge, that this is right for our first 2015 innovation competition. Be on the next slide. And what we'll be doing with this is we're looking for high impact innovators, regardless of tax status, who have a product that can help solve consumer household cash flow challenges. We'll be selecting these organizations through a competitive application process, which is ongoing right now. And they'll participate in an 8-month program where we're going to help them to build their business and their products by providing capital, connections to other industry players who can help them scale, educational opportunities to learn more, to learn what you need to learn to really build a financial services product in this country. It's very complex and requires a lot of different skills that very few small organizations have. And provide really customized technical support, both from ourselves at CFSI, but also our partners, IDEO and Ideas 42, and several other partners that we've engaged to help with legal and regulatory issues. Paul Hastings on the legal side, and Promontory Financial on the regulatory piece. So between these organizations, I think we've got a lot of resources we can really help to drive to early stage organizations to help them scale. And specifically on the next slide, we kind of go into a little bit of this, but we'll be providing each winner with $250,000 in capital structured to the needs of that organization. The professional services I just spoke about, and we'll hear more about that from Ideas 42 and IDEO in a second. Detailed knowledge of financial services through this program, so whether they're connections at CFSI or other partners at JPMorgan Chase or potentially other network members. Opportunities for networking so that participants can make the connections they need to grow the business, and then mentorship and national partnership opportunities. Together, what we're looking for with this comprehensive solution is to identify the future leaders in financial services, so that at the end of this 5-year program, we have a new generation of players, whether that's in the for-profit space or the not-for-profit space, who are focused on helping solve these consumer challenges, especially around household cash flows. So with that, I'm turning over to Matthew with Ideas 42 to give a little bit of perspective on on how Ideas 42 would bring a behavioral economics approach to helping organizations in the cohort solve these problems. Matthew?
Great, thank you so much. So if can I get the next slide? So we want to talk about this in two formats. I'm going to firstly give everyone a sort of very brief introduction to behavioral science, what behavioral science is about, and what are some of the quick insights you can get. And then second part, I'm going to talk a little bit about different types of behavioral barriers and solutions, especially as they reflect on financial capability. Next slide. So I'm going to start with this picture, which I think is really just captures a lot about humans and who they are and how they behave. Now, if you look at these people on the right on the escalator, they're clearly people who intend on working out. They're going to the gym. They're behaving well in that capacity. But there's also this kind of really interesting thing where they want to go to the gym, but they want to work out, but they want to just wait another 30 seconds. That they want to delay starting to work out by just a little bit, and to do so, they're going to take the escalator. And I think this just captures so much that people are, we have goals, we have ideas, we want to better ourselves, but we also sometimes will procrastinate or be a little bit limited in our capabilities. The second thing that I think is really important from this is that there's someone out there who realized that if they put an escalator in front of their fitness center, that a few more people would actually go in. And I think that's just really clever to know that people who do want to work, who do want to improve their bodies, might be a little bit more encouraged to. If you just make it a little bit easier for them to actually get in the door by installing an escalator. Can I get the next slide? So here's another quick example. This is from World War II. And during World War II, the U.S. Air Force introduced the B-17 bomber, which is this incredibly sophisticated machine that they were really happy and impressed by the technical capacities. But they had this small problem in that it kept crashing. That people realized that the pilots would actually be moving the landing gear right as the moment of going down occurred, and there's just like this problem where they crashed a lot. So what the Air Force started to do is they started to redo their training programs, trying to really train people really well to make sure that people didn't make mistakes. They introduced this motto, excellent airmen create no errors. That didn't work. They said, okay, maybe we're hiring the wrong people. So they redid their recruitment strategies. That didn't work. Finally, they hired a psychologist, and that psychologist was looking at all their educational materials and said, okay, this all looks great. And then he asked a funny question. He said, can I take a look inside of the cockpit? So on the next slide, we'll see the cockpit itself. So this is what the cockpit looks like. And as you can see, there's all this complex information going on. There's all these different dials you have to be paying attention. There's all these levers and buttons that you have to be able to do. And I want to call your attention to two levers in particular. Now, these two levers, the one on the left is the one that controls the landing gear. And you have to move that lever up and down to have the landing gear come up or down. That second one on the right is actually what controls the rudders. And so you pull that one down to slow the plane as you come into a landing. And so there's this funny thing that would happen in these cases, that the pilots would see both these levers. They had to pull one up, they had to pull the other one down, and they got just a little bit confused by that. And I think it's really actually quite natural. And what ended up happening is that the psychologist looked at that and said, okay, here's what we're going to do. He put a little sticker on both of them. So the one that was the landing gears had a little circle, which obviously stood for the wheels. The one that had the rudder had a little rectangle to stand for the rectangle. And all of a sudden, the problem just stopped. The pilots no longer had this problem, and this is something that they've continued to use today. And so I think it's a great example of just thinking about how these very small differences can actually, in the environment people are in, can actually really influence outcomes in the way that they make decisions, in the way that they perform actions. So the next slide goes into a bit more detail on this. So think about, I'm trained as an economist initially, and as an economist, we have this sort of model of how human behavior works, that people start out by making some decision. You know, you want some outcome X, Y, Z. You know, do you want yes, no, I don't know what I actually want. Then that, on the next slide, will actually lead to these actions. So if you want the outcome to occur, you take action A. If you don't want it to occur, you take action B. And then, of course, those actions themselves lead to outcomes, that, you know, the thing happens or not. But I don't think that's actually how a lot of us really make decisions, that, you know, when we're taking the action, we start asking ourselves these other questions. So how hard is this going to be? What's the next step? And so really, this is my revised model of human behavior. I think it looks a little bit more like this. Can I get the next slide? So it's sort of a mess that, you know, where there's a decision that we make, we maybe take the action that's associated with it. Sometimes the actual action, you know, we start doing something, we stop halfway through. It's just a little bit more of a mess than we might think that it is if we had that very, very simple, you know, A leads to B leads to C idea of how human behavior works. So how does this matter in the real world? Here's an example: is defaults. So if you look at these, this chart, this is showing organ donations in two very different types of countries. Now, in the green countries, they have really, really high organ donation rates. 100%, 90% of people are signed up to be organ donors. In the gray country to the left, it's much, much lower. We're talking about 0 or 20 or 10%. Now, you know, one thing could be this, oh, maybe this is a big cultural difference between these countries. That's not really true. What the difference is this very simple way that the forms work. So in the United States and in most of these countries, if you're at the DMV, you sign up for a driver's license, and there's a little box you check. And that box is what you check to become an organ donor. And if you check that box to become an organ donor, but in some countries it's the exact opposite, that you check the box to say, I don't want to become an organ donor. And I think, you know, it's just this very, very, very simple form. You know, is the box checked or not? But it actually has this huge impact in how many people are going to be registering for organ donors. Now, this also has other potential. So on the next slide. So this works. How does this matter for financial capability? Well, think about how this works with savings. So imagine you're starting a new company, you're starting a new job, you're trying to figure out all these things. You know, what are your responsibilities, who your coworkers are, where's the lunchroom, and you've also got this other decision you have to make at that point in time, which is how much you're going to put in your 401k and into what funds. And what's really funny about this is that a lot of people, you know, they have every intention that they want to save money, that they want to continue, you know, and do well in their old age, but they actually get just a little bit waylaid because you've got so many other things going on at this point in time. And so what happens is they just don't sign up for several years. Now, if you do say, okay, instead of saying, you know, you need to opt into signing up for a retirement form, what actually will happen is that they'll have people opt in or opt out. So you say, okay, you're signed up for retirement, and if you choose not to, that's fine. And that has a huge, huge effect on how many people are going to be starting the 401k. And of course, you know, the earlier you start your retirement savings, the better you're going to do. Now, on the next slide, I've got a cautionary note. Can I get the next slide? Right. So one thing is just thinking about how you know, you have to really diagnose before you design using this framework. So people were thinking, oh, defaults are really effective. They're great at increasing savings. And there's this funny thing that happens. So they tried to do something with the earned income tax credit, where they said, okay, when you get this tax credit back during your tax filings, we're going to have some of the refund go into savings bonds. So there's an animation on the next slide. You can press the button, please. So if you do an opt-in version, you know, again, sort of same thing with the 401k, that basically no one says, oh, I'm affirmatively going to try and sign up. But on the next slide, you'll see actually what happens with opt-out is nothing happens. It doesn't actually change people's behavior. And so people did some research into this and said, okay, what's going on here? and they did a survey, and there's a lot of potential reasons people might be doing this. They don't trust the government, they don't know anything about savings bonds, they weren't sure if the bonds were a good solution. But what really happened was that a lot of people just had a very specific plan for what they were going to do with their refund. It was sort of, they were already planning to get their car repaired or something like that. So they really did have a plan in place. So that's just a quick overview of behavioral economics and behavioral science. I know I'm now going to be talking a little bit more about specific barriers and solutions and how they apply to financial lives. So as you recall from what Ryan talked about earlier, cash flow problems are exacerbated by a lack of savings. And he mentioned this very briefly, and I want to go into a little bit more detail about this, is that there's all these complex trade-offs that you have to make, that if you have a very tight budget, you actually have to spend a lot of your time managing that budget, which you don't necessarily if you have a little bit more income, a little bit more savings. So how does this have an impact? Well, on the next slide, a big issue is just how all these, liquidity and stability matter for most Americans. So a lot of Americans have a lot of trouble paying their bills. If their paychecks were delayed by even a single week, all of them they'd fall short on things. And then, of course, a lot of them, because of things like this, haven't actually managed to pay their bills on time in the year 2012. And what I think is fascinating is that, if you ask people and say, okay, would you rather like more income or would you rather have more financial stability, a lot of them would prefer financial stability to moving up in their income. So on the next slide, we can talk a little bit about what you can do about this. So a lot of people will just try and provide people with information. And what's funny about this is it doesn't actually have much of an impact on behavior. If you have financial training, financial counseling, you don't necessarily see people changing their behavior, starting to save more. Now, what do we think the actual barriers are to this? So I think there's basically three that we can talk about briefly. So one is tunneling, focusing on now versus long-term planning. Second is hassle factors, just small things that derail action. And third is scarcity and cognitive bandwidth. So let's talk about tunneling first. So the way tunneling works on the next slide is it really sort of can make long-term planning very, very difficult. So imagine being someone who is trying to manage, a really complicated financial life, has a lot of payday loans or things like that. It's really, really quite difficult for you to figure out, exactly what you need to do to make your financial life better a year from now. You're too busy firefighting and dealing with short-term challenges, and so you don't have much time or resources to deal with other ones. On the next slide, I talk a little bit about hassle factors. So here's an example from some of the work we've done with colleges, is thinking about how very small changes can actually have huge impacts. So the FAFSA is a form that you use for financial aid, and one thing we've tried is actually giving people pre-filled out FAFSA forms based on their current taxes. And what's amazing about this is not only does it increase the actual submission of FAFSA forms, but actually has an 8% chance of increasing your enrollment into college, which is just absolutely enormous when you think about all the other things that have been tried. How much you'd have to improve high school education to improve it that much. And then finally, on the next slide, we can talk a little bit about how this scarcity works. So one thing that's really interesting is that if you're in this condition of poverty or having a low income, it's draining your cognitive bandwidth all the time. I'm not going to go into too much detail on these studies, but you can look at the citation at the very bottom. But one thing that's really interesting is that if you talk to someone who's low income, someone who's high income, and you do some intelligence tests, it actually it shows exactly the same unless you sort of remind them and ask them to solve like a budget question. All of a sudden, that makes it much, much more difficult. So how can we think about solutions to these problems? So here's one thing that we've tried is something we call the financial health check. So again, the way that this normally works in financial counseling traditionally is you may be taking a class, they ask you to do some budgeting and a lot of homework, and the person who's asked to do this, they get a little bit overwhelmed that there's all these things that you're asked to do on top of everything else you're doing with your life. And what ends up happening if you ever attend one of these classes is that a lot of people just don't do the homework. They don't sit down and make a budget. They don't maybe do this homework. It doesn't actually work necessarily. And the way what we try to do with FHC is really make things a lot more automatic. So you'd still sit down and work on a budget, you'd set some goals, but we also try and make a lot more things automatic, that we try to make it so you automatically had money put into your savings, automatically paying your bills, and you'd also get these reminders that would be sent to you to make sure that you're actually on task. On the next slide, we've got some of the results of this. And what we actually saw is really substantial differences in savings at the end of the study period, which is about 1.5 years. That, if you looked at the population who had managed to save some money, $100, $500, $1,000, it really saw a substantial increase in the amount of savings people had. So, the amount of people who had $1,000 saved up went from 10% to 20%. And if you think about that, it's just really a fantastic amount. Imagine, how much easier financial life is if you have that cushion of $1,000 in savings that allows you to really deal with all of these slight problems that you get hit with very constantly all the time, as Ryan mentioned earlier. So that's just a very, very brief intro to behavioral economics and how it works, especially in these ideas about financial capability. And I'll now turn it over to the other Matt Taylor, and he'll talk a little bit about IDEO and their approach.
Thank you so much, Matt. So thanks again to everyone for having me. As Ryan said, I lead strategy and operations at IDEO.org, which includes identifying the organizations and partners with which we work, and I'm really passionate about the financial health space. So delighted to be a part of the lab and to share more about human-centered design with you today. Next slide, please. So I'll spend the next 15 minutes or so introducing human-centered design through 3 parts, similar to what Matt did. So I'll talk at a high level about IDEO.org and human-centered design, do a deep dive into a few key methods within this approach, and then one brief case study from the financial health space. And I'll say that I'm not going to lean too hard with examples and stories in the financial health space and this specific challenge that we're talking about through the lab. I consider you all to be the experts as far as I see it, so I just want to share some tools from our work that I think can amplify what you're doing and what you're learning for low-income consumers and their financial health. So IDEO.org is IDEO is a design and innovation firm that was founded about 30 years ago, really when the seeds of Silicon Valley were being planted. And its heritage is really in product design. So many of IDEO's projects were all about understanding how people interact with physical things and then designing those physical things appropriately. And so on this slide, you'll see many products like the first Apple and Microsoft mice, the hinge on the laptop, and much, much more. But as designers at IDEO and at other firms started to quickly realize that this approach was using to design products was applicable to any types of things that people interact with in their daily lives, right? So it could be services like a bank account, experiences like staying in a hotel, communications that might try to get you to change your behavior around something, a digital interaction, or even how entire organizations or systems are designed. So you can really apply this approach, which again, we call human-centered design, others call it design thinking, to anything really. So when we say design, we mean it very, very expansively. Next slide. So let me bring the foundation of human-centered design to life through a fairly quick anecdotal story here. So this is Brad, a colleague at IDEO, when IDEO was working with a hospital system to redesign the patient experience. Brad pretended he was one really paranoid patient, not a designer or a researcher, said he had a really bad stomachache and he sought care. And when he checked himself into the hospital, he started to tape the whole thing. Again, just saying he was really anxious about the care he would receive as to not compromise the integrity of his experience if they knew he was a researcher. Next slide. And so when Brad and his colleagues went back and reviewed the tape, this is what they saw. Now, this this is what you think of when you're at a hospital and, you might be nervous, you don't feel good, you have no idea where you're being rolled around, and this is what you see. That's, reassuring and calming, right? So this isn't to say that IDEO redesigned the hospital ceiling tile, but it is to say that paying attention to the human experience is important and can unlock very important insights that we might otherwise miss. Next slide. So human-centered design, obviously we start with people and really understanding their needs, interests, aspirations, and behaviors, but it's not all about people. So when we see innovation out in the world, we see it really happening at the intersection of what's desirable to people, which is what we lead with, what's economically viable, so what can an organization sustain and deliver at scale, and then what's technologically and organizationally feasible. So what can you actually deliver, being the organization that you are and being the constraints that we face with technology today. So next slide. So, IDEO was applying this approach across a range of different types of sectors, and the foundations in the world started to say, hey, if it's applicable to designing in the private sector and in the public sector, what about in the social sector? And so IDEO did some social innovation work, next slide, which ultimately led to the creation of IDEO.org, which is a nonprofit that sits next to IDEO and it focuses exclusively on applying human-centered design to poverty-related challenges, which includes those in the financial health sector. So that's the basis of our experience and where we think about learning about how human-centered design is applicable to the challenges that are being wrestled with within the lab, within your organizations, et cetera. Next slide. So we've been around for about 4 years now and worked on over 50 projects in 15 countries, from helping low-income teens build their financial capability through a mobile application to addressing access to clean drinking water in Kenya. And we do have a strong anchor in financial inclusion and financial health work, and that's one thing that really excites us is the relationship between what we learn in design internationally around these types of issues and what we learn in design domestically. We think there's a really fascinating feedback loop between these two sectors across the financial health challenge. So next slide. Now I'll start to go deeper into some of the critical methods and mindsets within the human-centered design approach. So when we talk about human-centered design, it's really 3 phases. Inspiration, which is all about gaining empathy into the people you're designing for and getting inspired by other innovations in the world that could be applicable to your challenge. Ideation, which is all about coming up with new ideas, potential solutions, and then implementation, which is all about delivering solutions through rapid cycles of iteration. And when you unpack these 3 phases, what you see are a lot of different methods and mindsets which help designers gain empathy, come up with, and test ideas. And so I thought today, given our limited time together, that I would just share a few of the methods that I think are particularly valuable in this space. So the first is multidisciplinary teams. So we believe that there's incredible value in bringing people with different perspectives into the problem-solving process. So your experience, that you might have as a leader of a team or that other members on your team might have can dramatically color how you see problems and how you see solutions. So when I think about our team here at IDEO.org, we've had everything from MBAs to architects to NASA engineers on a team solving these types of challenges. And it doesn't just have to be who's on your team, but it's about how you create moments in your work to create, to bring these types of perspectives into the challenges that you're addressing. So some things that we do, or we often do, what we call weekly design reviews, where we'll bring in different people who bring radically different perspectives to get their take on what we're learning or what we're designing. So that's one critical method. Next slide. The next is deep empathy, which may pop up here in a moment. So this is about using various forms of immersion and qualitative research to really understand your customers. So we tend to lead with a much more holistic view of our customers' lives and then work toward empathy around the specific challenge that we might be designing for. And we believe that this can help you see the relationship between different elements of our customers' lives. As Ryan said, these are just incredibly complex challenges that we're trying to solve. So you might start to see things like how their health affects their finances, or how their family plays a role in what types of products or services they use and why. And this is everything you might not get a lens through if you go specifically around a topic like, financial health from the beginning. And so we use a range of different types of methods to do this, from individual interviews to shop-alongs to intercepting people in the street. So, if we're working on a challenge around financial health, we might participate in a savings circle for a week, or we might go to the bank with a customer, or we might go shopping with a customer, or we might review their checkbook with them or spend a Saturday with them. Anything that will help us get a holistic view into their lives and their relationship to money. So we think deep empathy is a really powerful tool in your toolkit when you're starting to think about how you design solutions or refine solutions to meet your customers' needs. Next slide. So if you think about a normal distribution, the whole statistics thing, which the other Matt might be better at than me, extreme users are, folks on either end of the distribution. So the extreme positive or negative deviances. So in the financial health space, this could be the person who does everything outside of the formal financial system to, power users of specific products. Or it could be somebody who spends every cent they make versus somebody who spends or saves every cent they make. It really depends on the type of challenge that you're wrestling with in terms of the types of extreme users that you want to be conducting research with, but we think it's powerful for two reasons. First is because you'll gain insights faster than you would if you were talking to average customers. These customers will have stronger opinions about what's broken or what's really working great. And you'll hear them much louder than when you're talking to average customers. The second reason is because oftentimes these people are people who have profound workarounds that could inspire new solutions. So when I think about this sector, I think we've seen examples of where extreme savers go to great lengths to resist temptation to spend money, for example. So they may give money to their mom and tell their mom not to ever give them this money back unless X, Y, and Z conditions occur. So how might behavior like that unlock really interesting ideas around restricted access to savings accounts, for example? Next slide. So analogous research is another method that we use. And I really love this method. My background's in the social sector, and I think too often the social sector looks to the same sector for inspiration around what's innovative, when actually the powerful thing to do is to break down your problem into very general terms and then start finding inspiration from other industries or sectors or countries. So a classic audio example that brings this to life is a team that was working to redesign collaboration in an emergency room context. So how do we increase team effectiveness and drive down costly mistakes? And so this team asked, where the heck are there other high-stakes environments that involve a lot of teamwork? And they didn't have to go much further than a NASCAR pit stop, right? So the team went and visited a track, and they learned insightful things like the power of very, very specific roles and responsibilities. So if you pay attention and stop on a NASCAR pit crew, you'll see that there's one person whose sole responsibility is to hold his hand up in front of the driver, and the driver is solely focused on that hand, and the driver moves when that hand drops. And so that driver isn't distracted by the multitude of things going around them. They can just focus squarely on that hand so that they don't lose a second in the race. When we think about the financial health space, I think there's a lot of interesting behavior change analogs happening right now in the consumer health sector, for example. So again, just all about thinking about where you can find inspiration that could unlock innovative solutions outside of the specific space that you're working in. The last method that I'll share here is, next slide, is rapid prototyping. And I suspect that most folks on the line here today have a really good sense of what rapid prototyping is, but it's the notion that we build fast to test ideas, and we do it in a really low resolution, low cost, low risk way by getting things in the hands of customers very, very rapidly to test our hypotheses and then assumptions, and then iterate on our product or service offering based on what we learn, and then continue this cycle of rapidly testing and rapidly refining. I think the only thing I'll add about prototyping is that I think too often when we talk about rapid prototyping, people think about products or digital apps, but you can absolutely prototype anything. It could be a new service, a new experience, a communication, a price point, really anything. More often than not, when we're doing work, what we'll do is we'll try to really rapidly test the value proposition of a new product or service in a really live way. So what if you set up a kiosk at a mall or something, or in an airport, or in a neighborhood even, and just start to engage customers around what your product is and how it works, and see what their reaction is. And then we think that you'll oftentimes get much more powerful feedback if you do that in a real way than if you just have a hypothetical conversation with somebody around what a product might be. So next slide. So there are many, many more methods and mindsets within the human-centered design process, but that's really just a few to help you start to see this approach come to life. And to continue that, I thought I'd share a quick case study. And I know the lab is focused on domestic challenges, but I thought it'd be fun to bring in an example from a completely different context, which I still think highlights how and why you might integrate human-centered design into your work. So I'm taking us all the way to Nigeria, one of the biggest countries and economies in Africa, huge population, and huge population of extremely poor people, like over 50 million people in the country, of something like 170 or 180 million. And over 40% of folks in this country are financially excluded. Next slide. And so getting people into mobile money is a really powerful lever in improving their financial health. They can start to manage their money, save more formally, build credit, and access advanced products like insurance. Next slide. So we worked with a partner who was trying to drive mobile money adoption through a micro-insurance product. They thought it would be an incentive to sort of pull people into mobile money. They cared less about the micro-insurance, but more about getting people engaged in mobile money, and they had the partnerships in place to do this with health insurers and providers. They had the product, but they really weren't getting any traction. And so this is where we came in. Next slide. So in human-centered design, as I've said, you start with people. So we used a range of methods to better understand the lives of low-income customers and how mobile money and insurance really fit into their lives, from one-on-one conversations to working in a healthcare clinic to shadowing a mobile money agent. Next slide. Through this, we learned that many salient insights. I think chief among them was this need to sell a product that was about building healthy communities, not gaining access to microinsurance through mobile money. So it's a pretty simple flip, and perhaps an intuitive one, but a very important one. Money is very social in these communities, and therefore their informal behavior is mimicking insurance in a lot of ways. So if somebody has a problem, the community already steps in. So it became very important to think about how a product could reinforce this idea that buying microinsurance was actually putting money to work to make the community healthier in order for customers to see the value of the product itself. So next slide. So I think, what's interesting here is that you could think about that insight actually just changing the way in which you communicate about your product, right? But we viewed it as an insight that was salient enough to actually shift the entire customer experience. So, from when a customer first engages with a potential agent to, when they might re-engage or use different types of products, and how we might then design across this entire customer experience using that insight that we gleaned. And so next slide, you can probably guess what we did next. We created a set of ideas to flip the experience and went back to Nigeria and then tested them with customers. So we took our concepts and our hypotheses, we tested them with agents. I think in this case, in the specific picture, we observed agents talking to customers to try to enroll them and saw where, our aids, be it, new training or new collateral, fell short, or where they really helped the agent engage the customer. Next slide. So then we come back and then we say, based on what we learned, how do we deliver this holistic experience that really reinforces that insight about what the value is to these customers around this mobile microinsurance product. Next slide. And so you start to see a range of assets that really reinforce this experience, from an agent handbook to new certificates for levels of training to simple flashcards to help reinforce training that the agents learn. Next slide. And then a range of other assets, from a campaign you can put out in the community to build awareness, to specific SMS messages that they might receive at various touch points, to the business model assumptions that test and validate that experience. So, I shared this story even though it's in a different context because I think it's a powerful example of how we have to think about the value proposition of our product through the eyes of our customer. I think it also highlights how having a deep understanding of your customer can dramatically influence the entire experience, from your core product to services to how you communicate to your business model that you deliver. So really important to be intentional about all of those things. So I think we're out of time here, but the last thing I wanted to say is I really just scratched the surface on human-centered design, so I want to point you to some resources that could help you to continue to learn this approach and methodology. So DesignKit is our platform for sharing human-centered design. If you go on that website, designkit.org, you'll see a range of deeper case studies and information about methods and mindsets, and a link to a course that we distribute through the Plus Acumen Network. So thank you again for having me. I think we'll now turn it back to Ryan.
Alrighty, guys, we're going to jump into some panel discussion. So Matthew Darling with Ideas 42, could you talk a little bit about the respective strengths or similarities in your approach with IDEO.org, and could you explain how you may apply your thinking a little differently?
Yeah. I mean, first I'll say there's a lot of similarities, of course. So if you historically, both behavioral economics and the idea of design thinking actually came out of Nobel laureate Herbert Simon in the 1960s. So there's a lot of similarities in that. I think one of the major differences from our side was I think that we've got a lot closer of an attachment to the academic literature. So Ideas 42, we were originally based out of Harvard, and we were very much founded by top academics within economics and psychology who really want to take all this work and research out of the lab and try and apply it to real people's lives. And so a lot of that work is giving us, this framework to think about the diagnosis, exactly what's happening, why people might be behaving in an odd way. And we supplement, both the academic work and the qualitative work that the other Matt was talking about earlier. And I think it's sort of a difference in emphasis. I also think, one thing is we put a really strong emphasis on testing our work using randomized trials. Making sure that we can verify that our solutions work and improving them as we go. So we never stop testing things. We're always trying to see how we can improve our previous solutions. So I think that's the major difference from my thing. I think we do a lot of work very similar to IDEO. I loved a lot of Matt's presentation and a lot of things that I'm like, oh yeah, that's really similar. Especially I think the analogous research slide where, thinking about how different domains can solve problems and borrowing from other ones, that spoke really strongly to me as well. So I think it's they are very, very similar, and it's a matter of emphasis. I think we're, the IDEO tag of human-centered design, I think we bold the human-centered maybe, and they bold the design. I think that's maybe a rough idea of what the difference is.
Yeah, and Matthew, I wanted to follow up on that. I mean, maybe you can give us a sense of where is an intervention or financial product where you really saw kind of an observable change through a great example of behavioral design and intervention or behavioral approach?
Yeah, so I mean, I talked a little bit about the financial health check earlier. So that's again, it's sort of redesigning how financial counseling works and trying to sort of say, okay, the problem isn't people don't have enough information. The problem is, people procrastinate, or they're not going to necessarily, sit down and work on a budget because that's just not fun. So that as we saw earlier, that really did increase savings amounts. We've also done some stuff, with how bank accounts maybe get opened, right? So we did this work with a bank in the Philippines, and they sort of realized that people sort of had this concept of, oh, I should open a savings account, and they didn't necessarily have like a plan to do anything with it. People really just told them they had to open one, so they opened one. And so we redid a lot of their account systems, and just the way it was framed and discussed, and that led to a 37% increase in savings with that population. We've also just done some stuff with people who maybe aren't paying back loans on time. You can think about people who, they have just so many things going on in their financial lives, and it's really quite hard to prioritize and know when something's coming up. And we found that in a couple of cases that we can use just simple reminders to just say, hey, just remember, you've got a loan coming up in 3 days, and people will, if you actually do that and send that to people, they'll be like, oh, that's right, I completely forgot about that. Even if the loan's quite large, Doing that, we were actually able to reduce fines by 25%. And a similar study did the same thing with rent payment, actually, which actually reduced evictions by about 50%. So I think there's a lot of things we can do, both in terms of like redesigning entire systems, but also maybe these targeted nudges, such as reminders that if you hit people at the right place at the right time, given what our diagnosis is, you can have a really large effect.
Yeah, that's really interesting. And Matt Taylor, let me ask you. So, what is, when you're thinking about your partnership with the Financial Solutions Lab, what are the areas where you think you could really, where IDEO.org would really provide a lot of impact for one of the organizations selected to be part of the lab? You still there, Matt? Well, then, Matthew Darling, maybe you could take that.
Sure.
Sorry, Brian. Phone challenge. I can pop back in. Talking to myself via webinar is never fun, let me tell you that. So I was just saying quickly that, I think it comes back to the value of this approach. And I think, the value of human-centered design is really a process that you can lean on to navigate big questions that you're wrestling with. And the types of questions that we help our partner tackle are varied, right? So how do you more deeply understand your customer in general? How do you tailor your solution, be it the core product, the service that you're offering, how you talk about it to your customers, this experience that you wrap around the product, as I talked about in that case, and even the relationship between your product and your business model and the brand in order to drive impact that you seek to have in a really scalable and sustainable way. And so I think if you have a big question you're wrestling with that you think stands in the way of your product getting in the hands of customers or having meaningful engagement and impact, that's the type of stuff that we really like to roll up our sleeves and wrestle with our partners.
Great. And Matthew, might as well give you a crack at that same one.
Yeah. I think it's similar. Thinking about how the products that you're designing are really going to sort of interact with human nature, and understanding what exactly given the way that people are and how they procrastinate, how they might forget things, how can you sort of make things work just a little bit better? It's really easy to design, for the ideal human, or for Mr. Spock from Star Trek, and say, aha, I'll tell people, why this product works and why they should do it, and they will listen to me, and that'll be fine. And I think, thinking about, what actually, might be some of these behavioral barriers that might be, limiting engagement with your product. The other thing that I think people can talk to us about is in terms of trying to figure out, how do we fit this into the academic literature, or how do we maybe think about how we can test our products and make them work better, using A/B or other types of randomized trials.
Yeah, no, I mean, and it's, I think, it's interesting because all three of our organizations, CFSI has a very, we're very driven by the actual consumer needs we see through our research, and are very kind of analytically focused in trying to identify the consumer problem and really understand the underlying kind of reasons for it. But one can see how an approach that kind of brings the three organizations together with, drawing on, where do we see a real challenge that the consumers are facing, looking to Ideas 42 and saying, what are some of the behavioral motivations that might be behind that challenge? Like, why is this so tricky to solve? Why are existing solutions maybe coming up short? And then be able to lean on IDEO.org and say, let's start thinking about, more creatively. What are some other ways to kind of coming at that? You can see how those 3 points of view could lead to a really holistic solution for an innovator. So, I think it's a great approach. I do want to make sure that we have time for questions from the audience. So I'm going to turn over to Sora to guide us and give us, if anyone.
Yep. So Ryan, this one's from an audience member. Is this challenge exclusively focused on solving household cash flow issues, for example, providing tools to encourage and teach money management skills?
Well, yes and no. So yes, I mean, we are looking for solutions that are solving household cash flow challenges. But I certainly don't think it's that the that the solution is as narrow as that. I mean, one can imagine that there's opportunities for innovations in credit, in helping people save, and making better financial decisions, in extending financial services. In many parts of the country, there's not great physical options for even getting involved in the financial system. So, through this process, we've had energy companies who approached us about interesting approaches. We've had educational companies. By identifying a problem, we're really looking for a whole host of solutions. So, if your solution in some way solves the problem, we want to hear from you. And we created an application process that is extremely lightweight. It should be pretty quick, so that we can surface these ideas. One of the main things we're looking for here is to get a sense of who are the participants that are helping us try to move the market forward, so that if it's not a perfect fit for this particular challenge, we know that you're there, so that we can figure out how to structure our approach differently in the future to kind of come at this from all angles. So we're really looking for all the ideas we can at this point.
Alrighty, great. And I'm going to combine two questions here. Maybe you can address them both. One is, I'm not sure if I'm a perfect fit for the lab. Should I apply? The other one is, we're still in development, planning on launching in the near future. Are we eligible? And I'll let you know there are a few more questions, and we'll respond to those offline after the webinar.
So in the case of both those questions, I think it's a little bit of a ditto from the previous answer. If you think you're kind of close to our target, you should apply. We are, I think, as the examples of both Matthew gave here, and CFSI, we're really well set up for somebody who has a product. If you have a product in market, we're really well organized to help you grow your user base, to raise awareness of what you're doing, and to help you scale. That said, if you're about to launch a product in the next couple of months, I mean, you're kind of at that same stage. Or if you you think that your product fits in some ways and doesn't fit in other ways, I would still encourage you to apply. We're not trying to get some sort of vanity metric out here that there were 50,000 people applied for this. We know there's not that many organizations solving this problem. But we want to understand who is out there and what the approaches are and where they are in their life cycle, because that will be incredibly valuable for us over the next 5 years. This is a 5-year effort, and we want to know how we can help move the industry forward. And that really, the first thing we have to do that is to understand what the industry looks like. And so I would encourage you to apply, and we'll go from there.
Alrighty, great. And as I mentioned, we'll respond to the other questions offline. Ryan, do you want to give us a wrap-up?
Sure. So thank you, everybody, for joining us today on the webinar. As I think I made clear, we have an application process right now. You can go to www.financialsolutionslab.com to go to our website and follow the links there to apply. It is a pretty short application, and we are encouraging anybody who is solving this problem to reach out to us and let us know. That application process will last through April 7th. And we'll select our winners at an event at JPMorgan Chase's office in New York City in mid-May, and be making a public announcement on June 11th at our Emerge Forum in Austin, Texas. If you have specific questions, feel free to reach out to us. The best person at CFSI is my colleague, Asad Ramzanali. His email is here. I'm sure he'll appreciate getting the hundreds of emails from questionnaires online. But we will try to kind of follow up and make sure that we answer any questions we can. I should also note that for everyone who joined the webinar today, we do want you to join us at Emerge. As I said at the outset, CFSI we are a network, and networks are only as strong as engagement of the nodes of that network and the breadth of it. And so we're always looking to increase the network, to raise the awareness of the challenges that we're trying to solve, and also of the members of this community who are working to solve them. Our Emerge conference is the best place to do that. That is June 10th through 12th in Austin, Texas. It's a great area to network with other people in the industry, learn more about kind of the state of the art around financial health. You'll be able to see the cohort companies. That's where we'll be announcing them, the winners. Hopefully some of the people on this call are in that winner pool. And you'll have fun. You can register at this little bit.ly link here. We have a code. We can save a couple $100. So we definitely encourage everybody to join us there. But otherwise, I want to thank everybody who joined. We hope this was useful. Please let us know if you have any comments, feedback, criticism, questions, etc. We definitely want to continue to try to drive engagement and raise awareness of this issue, whether or not you run a nonprofit or a startup. But we appreciate everyone's time, and thank you especially to our partners at IDEO.org, Matt Taylor, and Ideas42 at Matthew Darling. We really appreciate your guys' time. I think you did a phenomenal job of covering a broad landscape of information in a very short period of time. So I think we're all appreciative of that. So thank you.